Hey, welcome everybody to another edition of our Mitten Mortgage Lending Podcast with myself, Matt Horvath, broker owner Chris Sabonik, and today we're really going to spend a lot of time focusing on one topic, and that is making sure that clients, real estate agents have a good experience, good buying experience, refi experience, whatever it might be, and the things that go into that, and some precautions to be on the lookout for, things we prepare our clients for, and more.
Yeah, I mean, like Max said, having a good experience when you're buying, or really buying, selling, or refinancing, whatever. When it comes to a mortgage, having a good experience is dictated by a lot more than just who you're working with on the mortgage side of things. And we're going to do everything we can in our power. We're all about client experience, so we're going to do everything we can to make sure your experience is awesome. But it's much bigger than just one person. It's the whole team. When it comes to, we'll talk about buying a home for right now, because I think that's the most common, at least right now.
Right.
So when it comes to buying a home, yes, of course, like you're going to need a good agent. You're definitely going to need a good LO. But it goes beyond that. There's so much more in the back end and so much more that happens during a purchase. There's a title company that we work with, which a lot of you guys know about. You're going to have an insurance agent, a homeowner's insurance agent for your insurance. So we're going to have to work with them as well. And just the better your overall team, the better your experience is going to be every single time.
Yeah, I mean, that obviously that goes for buyers. Buyers, you want to have a good team, really starts with your real estate agent, your loan officer. Those are going to be the people that you're in contact with, early and often throughout the process, whether while you're searching for a home, while you're getting pre-approved. And you want that team to be solid. But also, if you're a real estate agent, you want to have a good team as far as people who you may refer to for loan officers, insurance, title. Your team's important, because as a real estate agent, a lot of your survival is going to come from repeat business. So you want to make sure that the team you're using, whether you're a buyer or a real estate agent, is going to set everyone up to have a good experience, because this doesn't have to be as stressful and strenuous as some people make it out to be. We do our best, I think, and I think we do a really good job here of making that transition seamless and easy, but it doesn't always come that way with everyone that you work with.
No, definitely not. And kind of like Max said, from the agent side of things, I would say almost 90% of the agents out there, they're working on a referral basis, right? So as an agent, if you aren't working with someone that is going to kind of mirror the same service and make sure that they're doing everything that they can for your clients to help you earn more referrals, then just reassess, just reevaluate if you're not. Because if you're an agent who does, you look back and you're like, man, I do an awesome job. I always kill it for my clients. I always answer the phone. I always go show houses. I go above and beyond. I tell them about taxes and how they're going to judge. If you're an agent that does everything and you check all the boxes, but you realize that someone on your team or on this team that we're saying for your buyers is giving a bad experience, it's going to affect their opinion of you at the very end of it. I always say, Mac could write a loan for a client and he could do the best job in the entire world. Mac could be the best LO, which he is. But Mac could be the best LO for this client and he could do nothing wrong. But if their agent is terrible, or if their insurance agent isn't getting us docs that we need in time, or if their title company is waiting until the 11th hour to send over what we need so that we can finalize stuff and send it back to the borrower, they are not going to remember or isolate certain things from that experience. They're not going to say, oh, Mac was great, but I remember the title company sucked. They took forever. They are just going to say,
bad experience.
Man, buying a home with Mac was fine, but it was a real headache at the end, or whatever the case is. It's gonna be one bubble. So. Yeah. Good experiences all around are going to create a lasting client, a client that's going to create referrals. But if, like we just said, if you're working with someone who's not projecting and helping you do that, you're taking steps backwards. Really.
Yeah. So as a buyer, like we said, if you're putting together a team to work with because you plan on making that move, you plan on getting yourself into a new home, new mortgage, whatever it might be, that team's important. If you're a real estate agent, a lot of times people do some evaluations, December, January. Check back with your clients. We've had clients that, or we've talked to agents who they thought the LO they were kind of referring people to was doing a great job, and then come find out 6, 7 months, 8 months down the road that the client didn't really have that great of experience with the LO. and that reflected negatively on the agents. So make sure you do some digging and evaluating your team and who you use moving forward, because the team you use is really important. And obviously getting repeat business in our industry, whether it's loan officers or whether it's real estate agents, obviously is real important. And so that leads into kind of our next topic here, which is something that I think leads to the clients having a good experience, and that is setting proper expectations. And there's a lot of things that go into setting expectations. And one of the things we always try to talk about is let's underpromise, overdeliver, which is really the goal for every loan that we set up with people. But setting those proper expectations, good or bad, is really important, especially when you're first getting started.
Yeah, Mac hit the nail on the head there. Like set the proper expectations, under promise, over deliver. If you set the proper expectations, it's borderline impossible for someone to have a terrible experience, in my opinion. I mean, and if they do, maybe it's because they weren't listening or something else. Who knows? But if you set the right expectations, it's going to be very tough for someone to come back on you for something that you did. But and that goes, like Max said, that's good news and bad news. So if there's bad news, here at Mitten Mortgage Lending, all the news travels at the same speed, whether it's good or bad.
Accurate information.
Yeah, bad news is one that gets that gets pushed around, which I think we're going to talk here about with some scenarios and stuff. But I think back to the under promise, over deliver. One of the easiest ways to tie that back in is with numbers, and we see this all the time. And this can happen on payments. It kind of happens on both, because if it happens to one number, it kind of happens to the other. So we see this on payments, monthly payments a lot, and we see this on cash to close a lot. Not uncommon for someone to call us or one of our LOs and have a conversation, and we go through everything. We kind of explain everything. We give you an idea of, here's your down payment. Here's what you're going to need for taxes, because you're buying a home and there's taxes on the home. Here's what you're going to need for insurance, because you're buying a home and you're going to need insurance. By the way, you're going to have some third-party costs. You're going to owe, title. There's some, like we talked about, there's some other people in this. So we're going to have all these fees. Well, let's use that for an example. When it comes to those numbers, let's use the taxes and insurance for an example. It's super, super common. I don't know why. I don't know why people would do this. It creates no favors, but it's very common in our industry for LOs, I'll say bad LOs, to overpromise in this case when it comes to numbers. So it's very easy to get someone on the phone and say, hey, this is going to be your payment and this is going to be your cash to close. And then kind of hide behind the fact that, I don't know the taxes of the house and I don't know the insurance of the house. And then during process, when those taxes come in or when that insurance comes in, magically now your payment is $200 or $300 higher than you guys originally talked about it being. Your cash to close might be a couple $1,000s higher than what we thought it was. Whereas here at Mitten Mortgage Lending, I can't tell you the last time I told a client how much cash to close they would need, and they ended up needing more. They need less every single time, which is by design, because I've never had anyone that I've called at the end of a transaction and say, hey, Mac, I know I told you needed to bring $20,000 to closing, but it's actually only 18 or 18.5 or 19. I've never had anyone get upset about that. So I can't remember the last time we gave someone numbers that were, I guess, the other way. We like to try to be very conservative with that stuff and set you up for success during your home purchase.
And we normally see it at the beginning of the process when we get somebody that says, hey, I'm deciding between you guys and somebody else. This is the quote I got. And normally this comes it comes in the pre-approval stage. Like, we don't even have a house yet.
There's usually nothing even.
This is literally just numbers on a screen. They could tell you anything. Yeah. That's normally what I tell people. But when we do look at those side-by-sides, I see it all the time where they'll say, well, you said you guys are cheaper, and I see that you're not charging me any fees, and so that they're comparing us to is, but yeah, your guys' cash to close is higher, and so they must be overall cheaper. Well, the other person they're comparing us to see it all the time where they might only put in 5 or 6 months worth of taxes are going to be due at closing. If you're buying in Michigan, you're going to owe 14 months worth of taxes at closing. No matter what. It gets chopped up and put in different places, but at the end of the day, you're going to be charged that. Yeah. But when we look at these examples, I'll always see that where they're undercharging them for taxes. And then, like you said, when it goes down the road, when you're really late down the road, and now the real tax bill comes, it's too late to make a change at that point. You've ordered an appraisal.
You're closing in 6 days.
Yes. So, and then that's when people get caught off guard. And normally people just kind of Go with the flow. Maybe don't complain about it, but really at the end of the day, there's nothing they can do because your taxes are what your taxes are. The problem is they didn't set the proper expectations, and they do that to make the overall numbers look lower. So again, you tend to go with them. I've seen it where they leave prepaid interest out, which if your loan is above 300,000, that can be a big number.
I've seen
that can be a really big number.
It can be a massive number.
Yes, and people intentionally leaving that stuff out to not prepare. So again, I always tell clients, like, I would much rather tell you something's going to cost $2,500 when I know it's probably going to cost you $2,000 or it's going to cost you $1,900 than the other way around. And almost every time I say that, the client says, "Oh yes, please do that. Please let's give me the higher number that we're prepared for."
Please tell me the max you think I'll need to bring.
Right.
And in every case, they usually end up showing up with less. But then, if there's $1,000, $1,500, whatever, however much we overestimate, go furniture shopping. I don't know. Go do whatever you spend that extra money on your house now because you were planning on using it and you have it and you didn't waste it on junk. And like Max said, taxes are a popular one. Insurance is a popular one. I've seen people put on $300,000-$400,000 purchases that the title work is going to be $750. And it's just not.
Oh yeah, I've seen. Oh, I'm going to go buy a ranch in Trenton, and they're comparing it to somebody, and they use $215 for taxes. That's not what's going to be in Trenton. It's not.
It's not.
It's not. It's not realistic.
Yeah.
So yeah.
I can plug fake numbers into this thing all day long, but we're never going to do it. So, and it's something like a quick refresher. I think we've talked about it before, but you mentioned the 14 months worth of taxes and insurance. I tell everyone, no matter where you go for a mortgage, you go to your bank, you shouldn't, you should call us, but go to your bank, call, big box lenders, if you go to one of these local retail lenders that has all these, fees and all this stuff, it doesn't matter where you go. There are 4 things that will make up your cash to close anytime you're buying a house. I don't care who you call or who you're working with. You're going to have a down payment. I think we can all agree, no matter what lender you're using, your down payment should be the same.
Unless you're using our 0% down conventional.
Unless you're using our 0% down conventional,
and
sure.
That's zero. But it's still an item. If there's 4 things you're going to pay for, we just are lucky if we get that program, we get to write a 0.
That's a fancy one. So
we get to write a 0 there.
But aside from that fancy program, you're going to have a down payment. And in most cases, if you're a first-time buyer, it's going to be 3. Or if you're doing FHA, it's going to be 3.5. Whatever it is, whatever program you're using, again, barring a couple, generally speaking, lender to lender, down payment is going to be the exact same. Correct. So number 1, no matter who you call, no matter what lender you're using, number 1 is the same no matter who you use. Number 2 is your escrows and your prepaids. So this is your taxes and your insurance that you owe for the year. Like Max said, it's not uncommon for bad LOs to put a really low number here. Well, in reality, we'll just talk about Michigan for right now. If you're in Michigan, in 99% of the places, taxes in Michigan are billed in advance. So when you pay the tax bill in July, you've effectively paid your taxes from July until next year in July. When you pay your winter tax bill in December, you've paid your taxes from December until the next year in December. Well, there's 2 parts to this. One is your escrows for your mortgage account. So the mortgage company is going to collect money and set it aside for you so that when that next bill is due, the money's sitting there. So, for example, I close on a house right now. We'll just talk about summer taxes for right now. If I close on a house right now, my first payment is going to be in January. I'm going to pay January, February, March, April, May, and June. I'm going to pay 6 payments before my payment is due, before that summer tax bill is due. So I'm going to pay 6 times. So there's going to be 6 months worth of that bill sitting there, but the other 6 needs to be collected right now at closing. So we need to set up an escrow account for you. So that's the first part of number 2. And that's where we're going to collect money to set aside so that your bills are ready to pay when they come due. That's your escrow. And then the flip side in Michigan, because you get 2 sides of it here in Michigan, is the prepaids. Well, think about what I just said about those taxes. The seller of the house that's selling that house, they paid the taxes in July. So if I bought the house from them today, I'm sure they're really nice people, but they're not going to tell me, hey, don't worry about those taxes. They're going to say, hey, you owe me for December, January, February, March, April, May, and June. So you owe me for 7 months. So if we count here, we just put 6 in escrow. We owe the seller 7. There's 13 months of your summer taxes right there. A lot of places will tell you you need 4 or 3 because it's very easy to come back after and go, we got the paperwork from the escrow company and actually we need more. And it's not their fault. So it's very easy to hide behind that. So number 1 is your down payment. Number 2 is your escrows and your prepaids for your taxes and insurance. I think we can agree that no matter what a lender tells you for number 2, No matter
Number
what
two's not gonna change.
No matter what they say it is, when it really boils down to it, the taxes on the house are the taxes, and the insurance you get is the insurance you get. So no matter what lender you use, at the closing table, number two, those escrows and prepaids are going to be the exact same. So number one, your down payment's the same. Number two, your escrows and your prepaids are the exact same. Number three is your third-party costs. We're talking about the four things in your cash to close. Number four is your third party. That's title work, appraisal, flood certs, tax certs. In most cases, your realtor is going to recommend the title company to us, or to you, to us, to everyone. So we're going to follow suit with what they say. You know, they're going to have a good title company that they're going to recommend. Well, I think we can agree, number three, no matter what lender you use, that title company is going to send that lender the same exact invoice for their services, right?
Correct.
So we like to overshoot how much we think that title is going to cost. Most places like to do the opposite. They like to undershoot it. But 1, 2, and 3, down payment, escrows, and your third-party costs, no matter who you call for a mortgage, are going to be the exact same. Now, some people might give you different numbers, but on signing day, they're going to be the exact same. The last thing is going to be your lender fees, number 4. That's the fourth item. And when it comes to lender fees, you're probably not going to beat us in lender fees because we don't have any. We don't have any junk fees. So there's nothing. Long story short, with the lender fees, most lenders will charge, just go down the list. Doc prep, application fee, I don't know. Just start naming them.
Yeah.
So, name a junk fee you've heard of.
Blank fee.
Slide
Fill in the
it,
blank.
slide it into here. Yeah, fill in the blank fees, slide it into number 4. We don't have any junk fees. The only lender fees you're ever going to see on a loan from Mitten Mortgage Lending are going to be an underwriting fee, and that's going to be paid to whichever lender we underwrite your loan with. So it's not even going to us. It's paying the lender that does it. Underwriting fees are extremely common on mortgages. That's, I don't know if
And we can build it in. It's technically optional where you could say you could not pay it at closing, but they just build it into your rate where you pay it over a long period of
They
time.
kind of bury it into your rate. So you have options. But when it comes to lender fees, we don't have any. There's no junk fees. So number 1, down payment. Number 2, escrows and prepaids for your taxes and insurance. And number 3, your third-party costs, no matter who you call, are the exact same. Number 4 is your lender fees, and we don't have any. So when it comes to pricing and when it comes to this, if someone's showing you less cash to close, or if something sounds off, it's probably because it is. Because as you guys can see, we just went through this 4 things. You're literally, when you come to Mitten Mortgage Lending, you are not paying for anything on your mortgage. You're not paying a fee that you don't absolutely have to pay to buy a house.
Yeah.
Like,
So and it goes back to what we originally talked about. Like, so if we know that we're cheaper, why don't we always just show a smaller number? Because we're trying to set the proper expectations of what things are actually going to cost, and we're not going to play dumb down the when we're in the at the 11th hour that, oh yeah, we just got this tax bill, we just found out about the proration.
I know title work will not be $750.
I'd rather overestimate. We went through 1 down payment, 2 escrow, 3 is third party. I'd rather overestimate 2 and 3 as much as possible because we don't control those and we're not quite sure what they're going to be, but we know we have a good idea what they're going to be, and we definitely know that small number that they're not going to be.
I'll add one more to that too, 100%, Mac. And on the back side of that too, if you think about it a little bit more, our borrowers are really never going to get just blindsided by extra costs. And what I mean by that is sometimes title needs a survey, or I don't know, your condo needs an extra verification, or your work needs an extra verification that has to be paid for. Whatever, it's a mortgage. Like, things pop up. There's random stuff that happens. When that stuff pops up and we add it into the cash to close, well, by the time we subtract all the stuff that we kind of overestimated, they're usually still, there's extra fees on there that happen for whatever reason during the process, and they're usually still bringing less cash to close than we told them. So your borrowers are not going to be blindsided when working with us.
Yeah. And then so that goes into also kind of the next thing we want to talk about, which is the scenarios that we've run across here, and some things recently. But when we talk about getting those proper expectations, it's not only with your cash to close and all that, but we also see, again, we'll use the term bad loan officers out there that overpromise with what you're going to be able to use for your income, or overpromise what you're going to be pre-approved for. And again, I would much rather underpromise those things. I normally let people know, like, if we can, hey, the pre-approval might be for 155, we probably got room to go to 160, 165, something like that, but like, check with me for sure.
Let's look at the taxes.
Yeah, it's a big factor. So that can vary. But we have run into some things recently where it's been, we're pre-approving for somebody 150, 155, and that is being a little bit cautious. But then if you come in with a pre-approval for that same exact person for 250, something's wrong here. Something's wrong, and we've seen some, and we'll go the extra mile to check for guidelines. If something's up in the air or questionable when it comes to income or even debts, like we'll have underwriters look at this stuff before issuing pre-approvals, before we go put offers out there. So again, our clients goes overall here, we have a good experience with that.
And it's about an experience. It's about having a good experience, but it's also about just like financially for our client, them not wasting money. And I mean, we can go down this road for forever. The client not wasting money. We don't want anyone wasting money. You can get money back though. You can't get time back. So
True.
People wasting time driving around, realtors showing houses all weekend or whenever it may be. It can be weekend, during the week. It doesn't matter when. If you're showing someone a house that's not approved to buy it, you are wasting your time. You're wasting their time. You're wasting the seller's time. You're wasting there's a lot of time being wasted here. And we've been talking. I've been using the phrase bad LOs. They don't even have to be bad LOs. They might just be inexperienced LOs. They might just be They might be a really good LO who answers the phone and does everything right, but they might just not know guidelines, or they might not have resources to find guidelines.
The proper tools to know what's accurate and what's not.
I mean, how often do we see it? Income calcs. I can think of FHA and conventional, conventional, FHA, even VA, whatever. Different loan types are going to have different income calcs. So, I can think very recently, I had a client who we were trying to pre-approve conventional. And at face value, if you just look at her application, it's great. Like she's approved. If you dig in more and ask a couple more questions, though, there are some things that are going to exclude different parts of her income. Like, for example, if you receive alimony or child support or anything like that, if it's not consistent and on time and in full, conventional underwriting, Fannie Mae, Freddie Mac, they're going to have an issue with it.
It's got to last 3 years.
And it's got to have a continuance. So there's you got to see it coming in, and then there's also the part that it's got to continue. But if your LO isn't being thorough and they're not asking questions and they're not digging into, if they're just taking an app at face value, you might have an extremely inaccurate application there. And part of it on that one, I chatted with this person. We discussed everything. I explained, hey, if this payment you were getting every month came in full, no problem. You're approved all day, every day. It's not an issue. But when we discussed that support payment that they were receiving, it never came in full. It never came on time. And for the last over 12 months, it's never once been the same amount. It's never been consistent. Sometimes it's short, sometimes it's over, sometimes it's way short, sometimes it skips. It's all over the place. Well, I explained to that person, hey, because of this, we cannot do a conventional loan. Like it's off the table. It's not going without this income, we can't do it. And I did, however, explain that we could do FHA. FHA would be no problem. FHA has some different rules there. We can average some of that income out. We can do more with it. And someone else told them something different. Someone else told them that they could use their support, which they can. But there's that little detail about it's got to be in full. It's got to be on time. It's got to be consistent. And that person promised them and told them that they could go conventional. And there's nothing I can do about it.
They're probably going to end up having a bad experience.
Unfortunately, they're probably going to end up paying for an inspection, and then they're probably going to end up paying for a conventional appraisal. And then I would imagine during process, people will discover what we've discovered. And this is where it gets scary for me is at that point, they might have to switch to FHA, but I don't know if the listing agent is going to be okay with that. I don't know if the house will pass the FHA. So if they do, I guess if they do switch to FHA, that's great, but they're still going to need another appraisal. And forget even the cost of the appraisals and stuff at this point. How stressful is this at this point? This person's going to be a couple, random example, but this person may be a couple weeks into process. They've probably spent $500 on an inspection. They've probably spent $500 on an appraisal or more. So we're out $1,000. They've got earnest money down, I'm sure, with their contract. So who knows what implications that may or may not have, depending on how things wash out. And then now we're, home buying is emotional. Like, it's extremely emotional. You're picturing you living in this house, and it's exciting, and there's, there could be kids or family members,
gathering
or
your
spouses or
items and
people
putting
involved.
together, getting ready to move.
You're getting your stuff ready. You're picturing things. You're shopping, for new things to hang. Like, it's a very emotional thing. So to be 2.5, 3 weeks invested into this, and then have some bad news come, and then have to navigate it, and then hope that everyone will play along with whatever changes come. It's giving me anxiety thinking about it right now.
And then, like, on the flip side, I'm dealing with one exactly right now, which
kind of the alternate side of what happens when someone does when this happens, right?
Yeah,
You're kind of on the sales side.
Yeah. So client right now has everything in boxes, ready to go, ready to move. We are clear to close on his loan here, but it's contingent upon him selling his home, which we have a buyer.
Which we knew.
They have an appraisal. They got an inspection. That's all good.
And you're just to stop you real quick, your borrower knows it's contingent on their sale.
Yeah, the sellers know. Everyone knows.
Everyone
we got to
knows,
sell this first.
because we set it up that way.
Yep, we got to sell this first before we buy. And now here we come. We're waiting on a closing date. When are they going to close to the sale of theirs so we can then close on ours? We're looking at back-to-back dates, looking at it. Come to find out, this lender that's doing the purchase of our client's current home was one of these, completely dropped the ball. They're now backing out financial reasons. So now our buyer, who's got everything ready to go, ready to move, has done nothing wrong. We've done a great job. Title's done a great job. The listing side's been great to work with. Now we're at a standstill.
This client was having a good experience.
Yes. And now we're at a standstill because the back end, the people purchasing, completely dropped the ball, probably misguided. And now I think about their clients. Their clients wasted, they had to know it was, they didn't know what was going on because they just wasted $500 on an appraisal, probably $300 on inspection, if not more. And again, you talk about the other thing that we haven't mentioned in the last few minutes here, time. This just wasted four or 5 weeks of everyone's time.
There's been weeks here, and to the time, back to the time thing, Mac's client could have sold the house to someone else.
It's possible. Yeah, could have sold to somebody else. So a lot of time's being wasted, and now you're going back to the drawing board. Can we get an extension? Can we make and we've looked at, can we make this work without selling? Which not able to do. And like we said, there's a reason we pre-approved it this way.
There was a reason we pre-approved the person contingent on the sale.
Yeah.
There was probably a 1 in a million way to make it work non-contingent, and I know it just not.
Yeah,
it's not going to happen.
Yeah. So I mean, there's things that way, and this all comes from doing the due diligence up front and having that proper team that you're working with. So you have those good experiences, and even going backwards, I'm just stuck on it. But our agent couldn't get a hold of this lender; they ghosted it. It's just a bad way to do business, and I just say those people give people in our industry a bad name or a bad rap when things like that happen. And I was saying to our side of it, our agent, I can't even imagine doing that. How would you not pick up the phone and let them know that, hey, we're all human, we do make mistakes, and not to that level. I pray to God I wouldn't make a mistake at that level, but pick up the phone, let people know what's going on. I wouldn't be able to sleep if I couldn't talk to them.
No, like I said, I can feel the anxiety thinking about it right now. And luckily, we're not in that position, and we're not going to be in that position. But it's just, and like
it's
Max
painful
said,
enough having a good client in that. It sucks. Feel bad for him in that.
It sucks for you. You are probably, back to
I know me and the agent feel combined just horrible for our guy buying this because he's done a great job. He's been a great client.
Neither one of you did anything wrong, and there was really nothing that either one of you guys could have probably really done to prevent it. But yet here we are.
Yep, exactly. And that's just people, again, not caring about the expectations that their clients have. Because we know these people that we're going to buy, they're having a terrible experience because they just wasted a ton of time, a ton of money from some joker just not doing their job properly.
They even, and again, we won't keep going. We'll get off of this here, but just to talk about how just absolutely terrible their time is. I know in your whole midst of them trying to figure out this thing, part of what their lender suggested to them was a refi on another house that might make this work. And who knows? We don't know. But I know they started that process too. So
that didn't work.
That client's been through a refi process, an inspection, and
talk about the emotions.
Just what a nightmare.
Yeah.
What an absolute nightmare.
Yeah. And doesn't have to be that way if you have the proper team.
And things happen. People people open new debt. People lose jobs. Like things happen outside of maybe our control, and you know that's okay. We'll try to we can control what we can control. We'll fix what we can. But that's just so a situation like that is just so avoidable. I mean, we're so careful with income, with all of our calcs. Like if we're not sure that you're approved and we're not sure that something's going to work, or we have an extra question on your income, you're just not going to see an approval letter from us until we're sure.
And knock on wood, if that day were to happen, we're not going to not pick up the phone.
Well, here's the thing. Like we aren't perfect. We're humans. Everyone that works here is a human for now until
AI takes over.
Until AI, is sitting here doing this for me. But everyone that works here is a human, and everyone that works here is a person. Mistakes will happen. Like Mitten Mortgage Lending, we have made mistakes. Like 100%. We make no mistakes. I make mistakes every single day, but we're not going to hide. Yeah. You're going to talk to us. You're going to know what's going on, and we're not going to just be unreachable and just out of touch.
We're going to get in front of it, and we're going to try to. We're going to get in front
of it. We're going to own it. And the thing, we've made plenty of mistakes. We owned every single one of them, and I would say the clients that we've even made mistakes with, I mean, a lot of them have still left 5-star. They're still satisfied because we didn't make a mistake and disappear and hide. We made a mistake and said, hey, we're human. We did this. Look how we're making it right.
Yeah, and like I said, we surround ourselves with a good team here internally within the office, but I also think everyone that works here, they're a good person. They're not out there trying to be slime balls with stuff. We're not trying to do the things that we see in our industry, which we've talked a lot about with setting those expectations and the scenarios and the things that can happen. It goes back overall to what we absolutely started with, and that's just having a good team, whether it's, if you're a buyer, going and getting that good team that's a real estate agent and a mortgage officer or a loan officer, and having that be your team. If you're a real estate agent, you want to have a good team you want to have a good insurance person you can quote to, you want to have a good title company that you use that you can rely on, you want to have good lenders that, when you refer clients to them, that they're going to take care of those clients as well. So having a good team is what this whole podcast has been about, and kind of the things that we go through on our end to make sure we set proper expectations, the nightmares on what can happen if proper expectations are not put out there.
Yeah.
So a lot of the things that we just talked here. So the last thing we're going to get to is just market update real quick. Not many changes, end of the year type stuff.
I mean, it's the end of the year. The whole country is, we had, you got Halloween, and then now, everyone's going to do the Thanksgiving break and the Christmas break. The country, I think everyone's in an election hangover. Everyone's tired of all the election stuff. So nothing's really changed. Nothing crazy. I don't expect to see a whole lot of anything happening until next year. Yeah. I do think that ultimately rates will be trending downwards and should be trending downwards, but I nothing's going on right now.
Not much changes.
Rates are where they're at. You guys know where rates are at. They're higher than everyone wants them to be, but they are what they are. I do think, to kind of finish off here with a little market update, we don't have much in the way of rates, but I will say, just from what I've seen in the past couple of weeks, now is a great time to buy a house. Like, I think the competition, I'm not going to...
Competition is low.
I don't want someone to say, oh, I saw Chris and he said there's no competition, but the house I offered on had 10 offers. Yeah, like there's still houses out there that are drawing all the attention.
Yeah, we talked about that in previous podcasts with, like, right now is if you want to get a house for under the asking price, the time is now.
I've had 2 offers in the last couple days accepted under listing price, which I don't know. We've probably never talked about that on this podcast. Everything's been over list price since we've talked about that.
And when April, May, June, July roll around next year, it'll be backflip to the opposite. Where if you got a house listed if a house is listed for $300, we better be offering $310 or something like that. Like it just goes back to that scenario that we had.
I've had a couple people though who I don't know. We're slightly discouraged. Maybe a couple of them have been pre-approved for a little while. Anyways, they've gotten, like I said, I've had 2 offers accepted in the last couple days that have been under ask, and there was like no competition on the house, and they're getting everything that they asked for. So
yeah, first time home buyers. Now's the time for those.
Yeah, now's a phenomenal.
You don't
time.
have to sell like.
And again, everyone keep in mind, like, yes, rates are higher than anyone wants them to be, so your payment might be higher than you want it to be. Rates will come down eventually.
And we'll take care of it.
And when they do, we'll take care of it. Now, keep in mind, though, like your taxes are going to go up after you buy all the things we've talked about before. So get into the house. Get into the house and make sure you're okay with the payment. I'm not telling someone to take a payment that they can't live on, but get into the house, be okay with the payment, be okay with the way things are. Love the house. If you love the house, we can fix the rest. The rest of it will work itself out.
All right, so that wraps up this episode. Hope everyone out there has a great Thanksgiving, and we will see everyone the next time.